Hello, everybody. Thank you for joining us today. Hopefully, you can hear us all okay. We've got a very exciting webinar planned for you today, discussing having a real estate market comparison between the UK and Dubai, talking about the fractional real estate investment landscape and what are the opportunities for global investors. So today I'm joined by Joseph L. Am, from the PRYPCO Blocks team. He's the general manager and senior executive officer based in Dubai. Joseph, welcome and thank you for joining us.
Thanks, Garrett. Thanks, Jatin. Very happy, very excited to be here also. Excited to share an overview about crypto blocks and investing in the Dubai market. And yeah, looking forward to it.
Good, thank you. And we are also joined by Jatin Ondhia, the CEO of Shojin based in London. Welcome, Jatin.
Thank you. Hi, everyone. And again, very pleased to be here. And I'm excited about this opportunity to discuss the UK and Dubai markets for our global network of investors. Obviously, in a very connected world today, you can invest all over the world through pretty much through your phone. So it'll be great to learn and to share some information about both markets.
Super. Thank you, Jatin. And my name is Garrett Stanhope from the Shojin team, and I do business development. Right. So, Jatin, why don't you kick us off and give us an intro about yourself and also about what Shojin does?
Yes, absolutely. I will actually share some things here. So Shojin is a UK FCA regulated digital investment platform. However, unlike traditional real estate investment, we actually specialize in providing loans to mid-market real estate developers. So we specialize in the market between 10 and 60 million pounds. That's where there is a funding gap in the market. And if you imagine somewhere like the UK, there is a serious homes shortage. And one of the biggest reasons is that small and mid-sized plots of land don't get developed because they don't have funding. So what we do at Shojin is we originate these loans, we do all the due diligence and assessment in-house, and then once we're ready, we provide the funding to these developers. And then we turn around and offer this to our global network of investors through our online investment platform. So an investor can invest, 5K, 10K, 50K, 100K, doesn't really matter. You're still making the same returns. And this is our way of democratizing wealth, if you like, spreading the wealth to people who otherwise would not have access to this product class.
Super, thank you, Jatin. And Joseph, we'll pass it on to you now. Do you mind telling us a bit more about yourself and also what is PRYPCO Blocks for the people that don't know who have joined us today?
Yeah, thanks everyone. So my name is Joseph Elam. I'm the general manager of crypto blocks. I come from a diverse background of finance in general, but mostly into wealth management. And I've joined the crypto blocks team just a couple of months ago. Just to give you a couple of highlights about why we launched crypto blocks and what is the main kind of USPs of the company. Now, in terms of investing in Dubai, it does come with a lot of challenges, not only in the UAE, but obviously in the traditional way of investing in real estate. And we'll touch about obviously the good things about Dubai and why it's appealing to everyone. But it does come with a lot of challenges, such as, first of all, the high initial cost of investment. So if you want to invest in a specific property, you need to put a large lump sum amount, or even if you want to get a mortgage, you still need to put a large lump sum amount to purchase that property. In terms of property management, from managing the property from A to Z, identifying the right property to invest in. Obviously, Dubai is a large city, is well scattered. So which one is the right one that's going to obviously provide you an ROI that you are comfortable with. So that's why we launched PRYPCO Blocks. It's a platform that allows you to invest in Dubai real estate as low as 500 dirhams or roughly 110 pounds. So it's a platform that where you can obviously you need to go through a KYC process. You will have a list of multiple properties available for you to browse and select that are curated by our team. Again, it's the affordable entry here is by you investing as low as 500 dirhams. So you can use the amount that you were originally planning of investing in a full property and diversify it across many other properties across Dubai. We take the management of these properties out of your back, so it's completely hassle-free from finding the property, sourcing it, listing it on the platform, managing it and maintaining it, and obviously finding a tenant for you. And speaking about tenants, this is how you will also receive a passive income. So you will receive a monthly income in your PRYPCO wallet, which you can eventually use that money to reinvest in different properties or withdrawing them in your bank account. And this investment is completely secured as we are DFSA regulated. DFSA is our version of the FCA in the UAE. It is also based on principle-based approach in terms of regulations and risk-based approach as well. So very similar to how the FCA operates in the UK. And the entire management or the process of funding the properties is done through an SPV. So you will have an ownership in an SPV that will eventually own the property. So that's a quick overview about PRYPCO Blocks. More than happy to tackle it even further in the conversation.
Great, thank you, Joseph. So if we move on to the next slide here, I think we'll hand this one out to both Jatin and Joseph to discuss. So as we can see here, we've got a comparison between the UK and the UAE markets in terms of the inflation rate, interest rate, unemployment rate, GDP, annual growth rate, corporate tax rate, and personal income tax rate. So Jatin, we'll start with you. Do you want to give us a kind of oversight on what are the differences here and how that might affect investing into the two separate markets?
Yeah, absolutely. I mean, they are two different markets, and this is not just in terms of income tax, which is the one thing everybody thinks of, when they think about Dubai, obviously tax-free country, and there's a lot more in terms of what's there, the history there, the demographic that lives there, and so on. So I'll let Joseph talk about the UAE market because I think there are some very interesting things going on there, especially the inward migration. But with the UK, I would say it's always been a focus point for global investors, especially countries with traditional ties back to the UK. They love investing into the UK. And one of the biggest reasons for this is the solid rule of law and property ownership. So wherever people make their money, let's say somebody makes a lot of money in India, one of the first things when they think about investing in property, international property, they'll think of the UK. Why? Because they have a historic connection. They've probably been here many times. They have family here. Their kids will probably study here, and so on. So this has always made the UK very, very attractive for inward investment. And even today, we continue to attract a lot of international and foreign investment. However, there's also a very strong domestic market in the UK. And even if you just think at the most simplest level, 500,000 graduates come out of UK universities every year. A lot of them want to get onto the housing ladder. So all of this continues supporting prices. And then also for the last 30 years, we've just not been building enough homes. So putting all of this together, the real estate market in the UK is very, very well supported. It's obviously it's a knowledge economy. Unemployment rate's fairly low, although we have it has been creeping up a little bit in terms of long-term unemployment post-COVID. I think the biggest downside in the UK is the tax rates, right? So there's corporate tax, there's personal income tax. And this, to a large degree, does hold back the growth of the UK economy. That's just my perspective. But also, if you look around, everybody expected the tax burden, if you like, to go up following the budget, and it has done. But this is no surprise really, and the UK isn't the only one suffering from this. Just like a lot of governments around the world, the UK borrowed a lot of money during COVID, and at some point this money needs to get repaid. But in the with a backdrop of kind of higher inflation and everything else going on, it's proving a little bit sluggish. So if you look at the GDP annual growth rate, it's quite low. However, putting all of that aside changes nothing about the fact that the UK is still seeing, as I said, a lot of inward investment, a lot of support for house prices. And I think we've turned a corner. You can feel it in the air when you're talking to agents, on the front line. People are starting to buy more, prices are starting to rise again. So I would say now is probably a good time to get into UK real estate.
Great, thank you. And Joseph, do you want to tell us a bit more about the UAE market and the growth that you guys are experiencing?
Yeah, I mean, I think everybody heard or is hearing about Dubai booming recently, and it's due to many aspects. So we can go through them, and I think you've also highlighted here a couple of interesting points. So in the inflation rate and the interest rate that we're currently experiencing that are quite on par with the global economy. So you don't look at Dubai anymore as you know the kid who's trying to match the big players like in New York or in London or even in Paris or Hong Kong or in Asia, right? So it's already there. It's already part of the big boys. So it is matching global standards when it comes at least to the key economic points. I want to also highlight the GDP growth. So and I also have a slide that shows this a bit later, but it is definitely over the past couple of years been significantly increasing year on year, and especially way higher than the average GDP growth of the rest of the world. And even we want to look at the top performing countries, that has been always constantly up there. You made a point that there's no income tax in the UAE, and that is absolutely correct. And this is one of the main drivers why people immigrate to the United Arab Emirates and reside, whether here in Dubai or in Abu Dhabi. It is a key factor. Everything that you earn, you keep in your pocket. Everything that you earn, you can also reinvest, which is very, very important. And some people also say that going to Dubai or living in Dubai or even investing in Dubai is a short-term phase. We'll do it for a couple of years and then we leave. That is obviously also no longer the case. People are here and investing and purchasing properties and their own homes to live in for the long run, building their families over here. The educational system, the infrastructure, the healthcare system has also been increasingly or been built in a very, very strong way. And one stat that's also probably not here that I would also like to mention, and personally as a Middle Eastern, the safety ranking of the country has also been placed significantly high. Dubai is ranked as the fifth safest city, and Abu Dhabi is ranked as the eighth safest city in the world. That gives also a huge benefit to migrating to the country and settling down here. So those are in kind of a couple of words highlighting the current status of the UAE market, and we'll go deeper into the real estate market in a bit.
Yeah, no, thank you, Joseph. So I think you've got a few slides prepared for us. If we go to the
Yeah.
next slide, kind of delving a bit deeper into it. So before we go to any questions, why don't you get stuck into these?
Yeah, exactly. And I've noticed also on the slides that the titles of the slide are not mentioned. So sorry, apologies about that, but I'll explain every single one of them. So what you see on the top left is essentially the GDP growth of the UAE versus the rest of the world over the past, let's say, 6 to 7 years, and the projection of 2025. And obviously, pre-pandemic, it has been the Dubai real estate market, but also Dubai as an economy was a bit facing a bit of challenges, especially during the pandemic. But actually, UAE and Dubai were the first to recover from the pandemic compared to the rest of the world. Actually, in July of 2020, the airport was open, the entire country was open, and we were able to accommodate a lot of tourists and people coming and residing here in the UAE, and that's where the property market and this at the same time people started coming in and residing in the UAE at a much faster rate. I was living in the UAE since 2017. I've never seen a single person on stuck in traffic, and right now it takes me around 2 hours to get home. So people are definitely coming in. And as you can tell, as from 2022, where the world was going through a recession, the GDP of the UAE was growing at an exceptional rate. And that follows in 2023 and 2024, and the projection of 2025 are also quite spectacular. Now, the graph that you see on your bottom left is the growth of population in the UAE, in Dubai specifically, not in UAE, in Dubai specifically. And the reason why I mentioned Dubai is because 90% of the people that live in the city are expats. As you want to compare it to other Emirates, the rate will definitely be lower. But Dubai specifically, 90% out of them consist of expat, and the population is increasing year on year. Now, when you look on the right side of the slide, you will see the influx of high net wealth individuals by or the top three countries, so the UAE, Singapore, and Australia. And over the past 3 years, 3 to 4 years, Dubai has been or the UAE has been ranked as the top three countries that is mostly attracted by high net wealth individuals to come and settle and invest in the country. And by high net wealth individual, the definition is someone that earns or has a net asset of above $1 million US. So if we can go to the next slide, please. That shows and will replicate or echoes also in terms of the real estate market in Dubai. So people coming in, settle here, but at the same time transact in the real estate market. Approximately in 2023, so this is the latest data that we have, the property market in Dubai has been valued at around 1.4 trillion dirhams. So that's approximately 381 billion US. Definitely lower than in London, than in New York, and other countries. But the growth year on year has been exceptionally spectacular. So if you look on the right hand side of the graph, you see the number of transactions that Dubai has been kind of recording over the past couple of years. And in 2023, Dubai closed around 97,000 transactions just in Dubai. So it's not the entire country, just in Dubai. And that's in terms of real estate transaction, obviously. And now if you want to compare the rental yield as compared to the neighboring countries or the major, let's say, global hubs of the world, Dubai sits at a very healthy 8% rental yield. I would say that's a gross number that you could find. And if you want to compare it to New York, it's around 2%, London 1%. Not trying to throw shade at our friends in London, but those are numbers that they can speak for themselves. And if you look at Mumbai and Shanghai, that's also below Dubai. So and when you look at the interest rates, which is currently sitting at around 4.5%, but possibly and potentially going to be lower tomorrow. We're still waiting for a Fed meeting that's going to happen tomorrow evening. That could potentially also decrease it by another 25 bips. So you're better off putting your money into a vehicle or an asset class that generates income for you, but also capital appreciation, than just putting it in your bank account that obviously it's still generating income for you, but not as much as other asset class. So if you look at this number 2 years ago, I'd have said yes, T-bills, fixed deposits or money market funds are performing super well. The rental yields have not reached the state that they are at the moment, but today is the opposite, right? People are better off putting money in other vehicles than fixed deposit and T-bills than they used to be 2 years ago. So yeah, I mean, and just to sum up in quick words, the Dubai real estate market has definitely a lot of appeals. As I mentioned, the tax-free income, high rental yields, economic stability, as I just mentioned, strong potential growth, but there also comes with quite a few challenges, as I mentioned in the beginning. So identifying the right property, which one is the right one for you to invest in, which one is the right one for you to get a potentially good high ROI on it, that is close to a school, a metro, or a hospital, or the mall. So these are very important key aspects that you need to take into consideration before investing in a property. The market volatility is still an asset class, right? It's still investing. So it doesn't mean that because of the transactions are been going up or the trend is good, that it doesn't come with any kind of risk. It's very important to highlight that it is an asset class that can also fluctuate. Entering the real estate market comes at a high cost. Whether you need to buy it in cash, in lump sum, or still take or do financing for the properties, you still need to have a proper cash flow in your bank account in order for you to access the traditional way of investing in the real estate market, and obviously property management, handling everything from A to Z. And these are the main reasons why we've launched PRYPCO Blocks. It's an alternative way for you to invest in Dubai real estate market as low as 500 dirhams, which is 110 pounds, and gives you all the benefits of investing in the real estate market at a very, very low entry barrier.
Perfect. Thank you, Joseph. I think so you discussed the influx of expats coming into Dubai and Abu Dhabi. Typically, where are these expats coming from? And what do you think is the most appealing thing about the UAE market that is attracting them to move there?
Uh, uh, Thank you for that question. And it's actually interesting that you're highlighting this. Is that there isn't a particular nationality that is coming in. It's like everybody from around the world is coming in. But I do
Mm,
want to highlight a couple of events that happened throughout the world that also kind of led to this influx. Number one, um, so there was eventually the Russian Ukraine war that happened in 2021, 2022. So that also led a huge number of Russians and Ukrainians to migrate out of their countries and looking for a kind of a stable economy and obviously a stable country and a safe country to live in. A lot of those high net wealth individuals did migrate from those two countries to settle in Dubai. Another key country is from Asia, from China. The instability also that took place in 2022, where we looked at a huge recession happening in China over there, led also a huge population to kind of transfer their asset and their investment from China into the UAE. Similar thing to other couple of countries in Asia. We see also a lot of neighboring countries around the Middle East also coming into Dubai. Want to highlight Lebanon, Syria, Jordan, Palestine as well that come in. I mean, the Middle East is known also to be a bit of a challenging region, always kind of involved with geopolitical tensions. And fortunately, in the UAE or the GCC has been more of a stable kind of region for the Middle East in general, and people look to come in and reside in the UAE or in the countries that are neighboring because of this, because it's still close to home, still close to the culture, and so on. And obviously, a lot of people from Europe coming in, especially from the UK as well, to benefit from the tax-free income or tax-free benefits of living in the UAE. There's a lot of countries in Europe where tax has increased, whether it's on the corporate side or even on the income side, and companies also kind of relocating their hubs into the Middle East and especially in Dubai. So these are a couple of reasons why people are coming in, or at least from which countries or regions.
okay, yeah,
The
no, good.
I mean the one thing I have to say, and I've seen this on my all of my recent trips out there, is just how multicultural that place is. I mean, I thought London was a melting pot, but you definitely see it in Dubai. It's people from all over the world, and I think that is one of its biggest strengths in becoming a center for global business and commerce and finance and so on. So I've definitely seen a lot that I'm getting excited about in Dubai, and it's not just the low tax. I think it has a lot more going for it now, and I definitely see it's going to be growing a lot further.
Yeah, I mean, you've touched on an important point that I didn't touch on is it's global business and finance. So the UAE has two major financial hubs in one country, which is Dubai, the DIFC, the Dubai International Financial Center, but also ADGM, Abu Dhabi Global Markets. And these two free zones are enabling companies from all over the world to come and establish a presence here, giving them tax benefits, obviously attracting many talents to come and work in these zones, but also enabling startups such as PRYPCO and other companies in coming and forming, providing us with the right solution and also with the right guidance with sandbox environment to test out our products and platforms. And this is very essential. And it's one of those two, let's say, free zones have been the leading financial and fintech ecosystems in the Middle East as a whole. So obviously we can talk about this for a lot of time, but it's very important to highlight this as well.
Yeah. And I think that is the primary reason why, even we're going to be opening an office there very shortly, because I think, especially to service the broader kind of GCC region, and then I think they call it, is it MISA, Middle East, South Asia and Africa or something, that seems to have become the hub.
Yeah, and Joseph, do you think obviously, rapid growth for any region is great, but do you think that the infrastructure is keeping up in the Middle East? I mean, you mentioned before your longer journey home stuck in the traffic, and me and Jatin had the pleasure of sitting in it last week when we were in Dubai as well. I mean, do you think the infrastructure is keeping up with the rapid growth that the region is facing?
It's a very good point, and I would say yes to that because again, the country has been built 56 years ago from literally nothing, from a land of desert. And if you come to Dubai, you will see obviously a lot of you know, key hubs, key centers, Dubai, downtown Dubai, Business Bay, Dubai Marina. So everything is kind of in a linear format. Dubai was initially like a linear city, and now when you look at Dubai, it's more building towards the desert and growing, and then expanding its region, and kind of its presence. Now, with that, obviously comes building more infrastructure. And every time you build a new region or a new kind of community around Dubai, the Roads and Transport Authority and the Dubai government are taking this into consideration. To be honest with you, yeah, last year was a major problem. A lot of traffic was getting built up in the country. This year we've seen a significant decrease because new roads were getting introduced. The highways are getting, already they're too big and they're getting even bigger. New roads or new highways are getting introduced that are parallel to the main one, so you're giving alternative routes to other people. A metro line, new metro lines are getting introduced as well, so the public transport is getting developed, and so on and so forth. I want to throw a very futuristic also plan here, but Dubai next year is introducing flying taxis. So just as an FYI. So this will also help a bit with the traffic. I hope so.
No, good. And we're getting a few questions coming through on the webinar chat. So anyone else feel free to type in your questions there, and hopefully we'll have time to address them at the end. But Jatin, before we move on to discussing the UK market, we had one question from Abaz Khan. Forgive me if I've mispronounced that. And he was essentially discussing investing into Dubai, into PRYPCO through international countries. In this case, he was discussing investing from India. I mean, is this something which is easy to do, difficult to do, and something that PRYPCO can help international investors with?
So, I mean, I think it's an India-specific question, an India-specific problem. I think because investing or sending money outside of India would also incur some taxes to the residents and citizens of India. So it's more like a capital gain tax if you would to invest outside of the country. It is a problem that I wouldn't say it's a problem. It's more like it's a challenge that that the Indian kind of citizen and residents are going through at the moment. I mean, nothing that we can do in particular to solve that for them, but at least transferring funds from India to it is acceptable at the moment. And what I can say is that I think the only way for you to get taxed on this issue is when on the investment, sorry, is when you liquidate. So if you think of investing in Dubai as a long-term project for you, I wouldn't really kind of mind making the transfer as long as you're convinced about investing in a specific in that specific project that you're looking at. And it's the same thing in any other asset class. I'm not only talking about investing in Dubai real estate or not. Even if you want to invest in the stock market or cryptocurrency or anything else, as long as you have a long-term vision, that's what matters. And this is where you make the most potential returns that will eventually kind of recover all the taxes that you will need to pay eventually.
Okay, no, great. And Jatin, do you want to move us on to the next slide then, and we can compare the UAE market with the UK one?
Yeah, absolutely. Inflation has obviously been the thing that's been bugging everybody globally, really, for several years now. It's great to see that it's finally coming under control, although there was a slight uptick again recently. But broadly speaking, it's nowhere near the highs of almost 12% where it was previously. So inflation is certainly getting under control, which then enables base rates to come down, because base rates, as we all know, shot up from near zero to over 5%. The interest rates are expected to come down further, although not as fast as a lot of people had thought they would. And this is something we've been saying for a while. You know, you get a feel on the front line here about how quickly rates are going to come down. That will be a function of obviously how quickly inflation comes down and what else is going on in the market. There will be a further cuts in interest rates, but it'll be much more slow and steady. And I don't, you know, the predicted interest rates show them going down to sub 4%. I actually, and I contradict the experts here. I don't think they'll go down that far. I don't think they'll go below 4, at least not for quite a while, because I think there's still a lot of other issues that the UK is grappling with. So, but on a good note, it's not just interest rates coming down; it's actually the mortgage rates, and mortgage rates are coming down, and actually probably more so than this graph shows here. So with confidence returning, with long-term rates, the long-term kind of the yield curves coming down, borrowing rates are cheaper. So, someone taking out 5, 10 year mortgages, rates are coming down, and that is providing a boost to the property market. And in the first time buyer market in particular, which is quite an important market, there's finally a lot of confidence returning there, because a lot of first time buyers saw interest rates that were not close to zero for the first time in their adult lives. And it was a shock, and they froze. Now I think people are coming to terms with it. Natural rates are never supposed to be near zero, right? So they should be hovering around the 4% mark. And I think for a lot of young people, they've now accepted that reality, which is why a lot of them are coming back into the market. You're seeing more movement in the market, more transactions taking place. I think they were saying it's the highest for 6 months. Prices are rising again. So as I say, things are getting better. And as an overall economy, post-COVID, we had really low unemployment rate. In fact, it was so low that it was actually very difficult to hire. That's now returning to a slightly higher level. It's difficult to say what natural levels of unemployment are. Anyone who studied economics knows that there is a natural level of unemployment that exists in the economy. I believe it hovers around the 4% mark. So it is inching up a little bit, but you also have a lot of people who are choosing not to work or going off on long-term sickness and things like that. So again, I can't say for certain whether this chart incorporates that or that demographic as well. But on the whole, one thing you do see on the front line is the labor market is still a bit tight. It's still expensive to hire now. With in the recent budget, they've increased the taxes on businesses. There's something called national insurance has gone up a bit. So again, that's going to hammer businesses, which may mean that they hire slightly less people. It remains to be seen. But one thing is for sure, I've said this many times, so it's not going to be a surprise to many people. Brexit was the most stupid thing this country ever did, and as a result of that, we have a labor shortage. The government talks about building 1.5 million homes in this term. How exactly are they going to do that if all the people that were building those homes have now left to go back to their home countries? So they've really scored an own goal there. And, a lot of people, myself included, did not vote for it. But unfortunately, we have to live with the consequences. A lot of it now comes down to how the new government handles immigration, whether they allow the skilled workers to come in who will help things like the construction industry. Unfortunately and sadly, I don't think Labour are up for that. I think they'll be much slower in doing that, which means that house building will be a lot slower than it should be. We need 300,000 homes a year. We have needed that for 30 years. We've barely built 200 or just over 200,000 per year. So there's a huge shortage. I don't think it's going to catch up anytime soon. So there's a lot of these factors playing into it, but we do need inward migration. We do need skilled labor, not just in construction, but in all industries, because there's no way they're going to train people here up quickly enough to fill those gaps. And then let's look at earnings now. One of the biggest concerns as inflation was going up was that earnings were going up, people's salaries were being put up, and while the private sector have kind of calmed things down, it now seems to be the state sector that's pumping money everywhere. So the government has recently put up wages for all government sector workers. And look, forget the rights and wrongs of all of this, but they are stoking inflation. But more importantly, their productivity is terrible. What they need to do is improve efficiency. And if you look at what's Elon Musk's new role again? Department of Government Efficiency. That's what we
Doge.
need here. Doge. We need that here because there's so much fat in the system, and until they get that under control, they're going to end up spending a lot of money and not getting any extra productivity out of it. But again, look, Labour still, I don't know if they're still in the honeymoon period, but we don't have much of a choice but to trust that they will come through this. They will listen to businesses and other people and actually do the right things to get things moving again. But okay, let's just go on to the next slide. So that really nicely brings us to GDP growth. Now, the reality is it's been sluggish. We saw earlier, we saw the 1%, and it will step up. The UK is trying to position itself as, like I said, as a knowledge-based industry, a service industry. We want to be leaders in tech. We have been in the past. There was a time when I remember we were actually one of the leaders in fintech. We seem to have lost that crown. Once again, a lot of this will come down to how the government deals with these various sectors. As long as the government pushes the various regulators to back these sectors, we can still keep that crown because it is a global center of talent. People like moving to the UK. Again, that's one of our biggest strengths is that we have this diverse kind of knowledge base and people from all over the world moving here. We've probably got a decade to make sure we get these things under control. I think we will. The British people are resilient. We will make the changes needed, but it's just a question of how much pain we will go through before things are sorted out. In the meantime, as far as it affects the real estate market, though, our population's going up year on year. So again, that will continue to support the real estate market. We've got a historical shortfall in housing. And this then nicely leads to house price growth. So, again, I always take with a pinch of salt whatever I read in the papers because, one day they say house prices are going up and the next day they say they're going down. And it depends which bit of data you're using. The only thing I can tell you is, a lot of the press are reporting that house prices are on the up again now. They've been moving up for the last 6 months. But the most the best example of this is actually on the front line. We are feeling that confidence coming back. We talk to agents daily about projects that we have funded, and we understand how those projects are being sold down into the market. So there is definitely something brewing, and it's getting slightly better. It's not shooting up by any means, but it is getting better. So I think hopefully the last couple of years of pain are behind us, and we're going to steadily now move upwards. This one is looking at different geographical regions and where house price growth may be going over the next few years. It's interesting to note London is considered by many people as where weirdly the slowest growth is going to be, because remember, London is already massively overpriced, and again, overpriced itself is kind of meaningless because as long as people are buying, it's not overpriced. But what's happening more and more is that as people are investing in the UK, both foreign and domestic, they're looking at where there's greater value. I'm really liking the Northwest at the moment, places like Manchester, but also the Midlands, Birmingham, Leicester, Nottingham, and all of these places are going to do very well because they are now much more inviting to young people. If you went back 15 years, 20 years, London was, I think, it's the same name they give to Goldman Sachs, the giant squid that sucks up all the energy around it, right? That's what London was. All the graduates that came out of uni would move to London because that's where all the jobs were. But the government did a great job of building up the regions so that especially by moving a lot of government offices into the regions, so that that would then bring people back into the regions, jobs back into the regions, and now a lot of private companies have followed as well. So a lot of the investment banks, for example, the accounting firms, law firms, they'll have offices in places like Manchester and Birmingham, and that in turn attracts young people to move there, and that in turn makes those places much more vibrant again. So Manchester, and as much as anyone from Manchester hates this term, but Manchester is like a mini London. It's London on a smaller scale. It's much cheaper to live. They can actually go out and enjoy themselves. Whereas in London, I think there's something like 65% of people's earnings go into paying rent. So really, what does that leave for their lifestyle? So if you are looking to invest into the UK market, certainly I would look at places outside of London. And it comes back to remembering that, investing is investing, right? Don't make it personal, right? You need to look at where are you going to get the best returns, and where are the best opportunities, and focus on that. A lot of people choose London because it's London, because it gives bragging rights at a dinner party. But if you're a proper investor, look at places outside of London. So I think that's the end of the slides, and I know there's a gazillion questions, so I'll hand over to Garrett again.
Yeah, and I think before we jump into the questions, which have still been coming through, so thank you everybody for sending those through. So just in terms of everything you said, Jatin, in terms of mortgage rates coming down, interest rates coming down, employment coming up, and now we've recently had, the election and then the budget announcement. Do you mind just tying that back to what does that actually mean for Shojin and people who are thinking about investing with Shojin?
Yeah, absolutely. So remember, at Shojin, what we do is we don't buy property. And this is where the big difference is, I guess, between PRYPCO and Shojin. We are lenders. We are the bank, in effect. We provide funding to real estate developers, and then we tranche up the risk. So you can be in the senior piece, the mezzanine piece, or the pref equity piece. So it talks about the order of repayment when the building is finished. Now, what this means is, the funding we provide is into the middle market, and we like the low to mid part of any local market. So what I mean by that is we wouldn't, for example, fund 10 million pound apartments in Kensington, because if that doesn't sell quickly, that can wipe us out. So instead, what we do is we focus on either first time or second time buyer homes or apartments. We focus on things like build to rent blocks, so all rental buildings, and also purpose-built student accommodation. We focus on the cities in the UK, the commuter zones around the major cities, and coastal areas. And because of the way because it's such an inefficient market, we're able to generate very, very strong returns, fixed returns, for investors. And the terms are about 18 months to 2 years long, so it's relatively short term. You don't get rental income in the same way. What you do is you get paid your interest at the end of the development. At the end of the development, the developer either sells the apartments or they refinance and then they take us out. So with us, you're actually becoming a lender to the real estate market. And of course, on the other side, we're taking security as well. So not only charges against the asset, but also cross collateral and personal guarantees. So we control all of that on behalf of investors. So as with PRYPCO, ours is it's a completely passive investment product, and we provide regular updates to show you the progress of the development, so you feel a part of it. Of course, you can always go and have a look at it as well. But based on the numbers we saw earlier, and that I was referring to, and to actually answer the question Garrett just asked, the real opportunity is at that lower to mid part of the market. That's where we have a serious homes shortage, and so that's where everybody should be focusing through Shojin.
All right, good. And Joseph, don't get too comfortable because I'm coming to you next with very similar questions. But Jatin, if somebody's investing with Shojin, what kind of returns can they expect, and how long will their capital be tied up for?
So typical tie-up is up to about 2 years. We lend at between 20 and 35% per annum. We keep about 25% of that. So investors typically get between 15 and 25% per annum.
Okay, great. And Joseph, if I am looking to invest into PRYPCO Blocks, what kind of returns can I expect? And how is it paid out? Is it monthly, quarterly, annually?
Yeah, so I'll take your question into two separate things. I'll also get back to the question that you asked, Jatin, how can you liquidate it, essentially, because this is a very important question also.
Hmm.
So with PRYPCO blocks, you can expect in terms of net ROI, so after all fees, on an annual basis between 8 to 12%. This depends on which property that you're investing in. In terms of net yield, what you can expect is anywhere between 5.5 to like 8% also in terms of net yield, also depending on the property and its location. Every All the properties that we have, we rent them out. The rental process takes roughly around 40 days for us from the transfer until we get the first income of the tenant. The income is or the dividend is paid out into their PRYPCO wallet on the application, which they can use to reinvest in other properties or withdrawing it to their own bank account. In terms of exits or liquidation, there is a 1 year lock-in period for every single property or every single investment. At the end of that 1 year, there's an exit window that opens, which gives essentially the opportunity for the investors to sell their own blocks or shares to other investors on the platform. But it's also an opportunity for anyone to buy other people's blocks. So that's one way for you to exit. So this exit windows happens every 6 months after the 1 year lock-in period. Also, when the property appreciates by 30%, this is where also we go back to the investor and say, hey, do you want to sell, yes or no? We issue a vote. Our strategy is to keep the property listed or sorry, invested for about 5 years. So after the fifth year, we also go back to the investor and ask if they want to sell the property, yes or no. So those are three ways for you to exit the property.
Okay, and then another question which came through is how do you guys monetize this? This came through
Yeah.
prior to the webinar. So, that's your business model. How do you guys monetize the business?
Yeah, so we have entry fees, management fees, and exit fees. So we charge 1.5% on entries for every investment that you make. We charge 1% annually. That's taken out of the rental income on a monthly basis, so it's prorated, and 2.5% on exit.
Brilliant. And this question came through for both of you guys. So what criteria do you have to choose your projects? You've kind of briefly touched over it, but do you have a whole due diligence process before you go and actually launch a project on each of your platforms?
Do you want me to take this on first,
Go
Jared?
Yeah,
for it.
why don't you start, Joseph?
All right, so there's a couple of metrics we look after before selecting a property. One is the location. So we have essentially, let's say, metrics for each highlight. So let's say location, the developer, how old is the building. So if it's, for example, 5 years or younger, it's a specific percentage that we attribute to the overall calculation of selecting a property. So we look at location, we look at the developer, how old is it, or if it's how old is the property. We look at what kind of view it has as well. So if it's a pool view, it's a, let's say, golf course view, it's a sea view. We look at sorry, there's a couple of, so obviously if it's a 1 bedroom studio or 2 bedroom apartment, the square foot of the apartment. So we look at many multiple factors. We put it in a specific algorithm that we've developed, and it will give us a score. So if the score is above of the threshold that we've put, then this is something we would consider, and we will go then from there to negotiate with the seller on a good rate. So what we do is we value every property that we have. We give it to a third-party valuation company. When we get the valuation report, our price that we offer will always be below the valuation report. So as soon as you enter or as soon as you invest in the property, you're already making returns on that property because it's already valued above the purchase price.
Brilliant. Jatin?
Yeah, so on our side, similarly, we have a very, very detailed due diligence process, multi-stage as well. So lending into development is not not straightforward. So most people would struggle to really understand all the various risk elements. We have a very specialized team that does that. They go through all the risk assessment of the entire transaction. Any risks identified need to be mitigated before we're going to make any kind of loan to it. We run all the various scenario analysis and so on, and then we also get third-party reports, with full indemnities in place, so things like valuations, cost consultants, right of light surveys, ground conditions, legal due diligence, and so on. So we aggregate all of this to determine, firstly, is this a project that we want to fund? Secondly, where are the risks? Can we get rid of risks? And we want to be aware of what risks are remaining, and then we're very transparent on those. The biggest risk naturally remaining on any development project is what happens if the market collapses between the time we put the money in and the time the building is done. So, there are some very obvious ones, but we try and pick up, where we can mitigate, we will. So, some things you can get insurances for, or you can put larger contingencies in place for. So by the end of it, we really want to be left with two risks: market risk and also delivery risk. Delivery risk we can control a bit more because we micro monitor the projects. So we attend every site meeting. We go in, look at progress constantly, look at the cash flows expected versus actuals, and so on. So we represent the investor in this entire end-to-end process, and it's as if it's our own money going into it.
And is this a fund, or do investors get to pick which project they put their money into?
Yeah, so they always get to pick. So what we find is, firstly, investors find it quite exciting to pick which projects they want to put their money into, and they can diversify as they like. We don't mind. The minimum investment per project is only 1,000, so people can even test drive with quite a low minimum. But yeah, the idea is that they pick individual projects and build their own portfolio. In the future, we might launch funds, because what we do find is once people have looked at three or invested in 3, 4, 5 projects, they're at a point where they just want to give us the money and say, just diversify it. So that may come in the future. But for now, it's all on the website. You click on the project, you get to see the full investment memorandum. There's usually a video, and then you just invest straight through there.
Okay, great. Yeah. And I'm just looking through more of these questions. So common questions I'm getting is what is the minimum amount? And I think more excitingly for Jatin and Joseph, what's the maximum amount I can invest? So minimum for Shojin, as we discussed, is £1,000. Minimum, correct me if I'm wrong, Joseph, for PRYPCO is 500 dirhams, which is about £110 GDP.
Yes, correct. In terms of maximums, there is a maximum. So anyone investing in a single property is not allowed to invest more than $50,000. So that's, I think, roughly around £39,000, if I'm not mistaken, per property. However, per calendar year, a retail investor is not allowed to invest more than $100,000. But that restriction is lifted for professional clients. So if you identify or you can prove that you're a professional client, it means that you have net assets above $1 million, then we will lift the restriction for you.
Got
but
it.
the restriction will still be there if for investing in the property specifically.
Cool. I mean, yeah, on our end, I mean, yeah, like I said, minimum is £1,000. There's no real maximum, but we actually try to make sure there's always availability for platform investors. So we work with a lot of family offices who could take deals in their entirety, but we strongly discourage that because we would rather have, they can take an anchor position, but we always want an allocation to go on the platform for regular investors as well. So no real maximum, but we try to avoid very large individual investments. Can I also, sorry, just very quickly, I saw a message earlier, and I thought I must answer that. There was a question around whether here it is from Mohammed: is Shojin products halal? From what I understand, it is investing in loans and debt. We're actually structuring our first Sharia compliant loan as we speak, so it will be probably launching in the next few weeks. And from after that, we should have a lot more of them.
I think, sorry, I see a question from Alex asking me to repeat the rules around minimum and how the conditions are removed. So I would just repeat that. So Alex, basically, uh, the limitation is per property. You're not allowed to invest more than $50,000 per property. However, per calendar year, your total investment in all the properties should not be more than $100,000. So those are for retail customers. If you're a professional investor, which means that you have a net asset of above $1 million, this is, I mean, in terms of your own assets, we will lift that restriction for you and you can invest as much as you want across all the properties, but you will still have the limitation per property.
And then the other question that we've been getting, Joseph, is about, can you get golden visa by investing with PRYPCO? Do you wanna cover that one?
Yes, you can get a golden visa investing on PRYPCO. That is only if you invest. So basically, how to get the golden visa? You need to invest 2 million dirhams in real estate in Dubai, and you get a golden visa. And you can get it through PRYPCO if you invest 2 million dirhams on the PRYPCO Blocks app. That is also the case. A lot of people ask, what if I have a property that is worth, let's say, 1.5 million dirhams, and I want to put another 500,000 dirhams in PRYPCO? Can I still get the golden visa while combining both opportunities? The answer is no. It needs to be only on PRYPCO Blocks or your real estate investment separately.
And then the other question that we got a lot before the webinar was people investing internationally. Can they invest through any currency, or do they have to invest through either dirhams for PRYPCO and then pounds for Shojin?
So from our side, we transact in dirhams. But anyone around the world can still invest on PRYPCO Blocks. No one. So we accept from literally anyone around the world, except obviously for someone residing in a sanctioned country. That is the only limitation that we have. But yeah, anyone around the world can invest. They can use a debit card as well. They don't not necessarily invest through bank transfer or transfer via bank transfer. They can use a debit card, and yeah. It's very easy, very seamless.
Yeah, ours is actually identical. So it's all in the home currency, the investment, because we only fund projects in the UK. So every investment is in the UK. So we accept from all over the world except sanctioned countries, and but it's the investor will send it through and give it to us in pounds. So they'll have the conversion on their side.
Exactly.
Okay. And then I think the other question that we've got through a few times, so Joseph, was about the PRYPCO track record. So how long have you guys been in business for? How many deals have you done? And I think it'd be interesting if you could add kind of your growth trajectory. So what is your targets for the region and how do you want to grow?
Yeah, thanks for that, Garrett. So the company is still quite young. We've only been operational for the past 7 months now. And in the past 7 months, we were able to fund 10 properties. And we have two that are currently live, one in Dubai Business Bay and one in Dubai Marina. So these numbers are actually growing month on month. The more properties we fund, the more clients come in, the more properties we will put on the market. So as soon as one property is fully funded, the new one comes in on the platform and so on. So it's a kind of fully revolving inventory that never ends, that never stops. And obviously, the more clients that are on the platform, the faster the properties gets funded as well. So it's more of a chicken and egg situation, right? It's a growth that we've seen growing quite steadily, and we're very happy with where we're going. And 2025 hopefully is going to be even better. Now, in terms of track record, the we have, out of the 10 properties that we have, 7 are rented out, 3 are in the phase of getting rented and fully transferred. So we have the documents already done. We have the title deeds. We have the share certificate that's been also shared with all the investors, and we're out there looking for some tenants. It takes around, as I mentioned, 40 days for the investor to start receiving their first income from the minute the property closes or fully funds.
Yeah, no, good. I'm just cautious of time. So, I mean, we've got loads of questions still coming through and ones that we didn't have time to cover, unfortunately. But I think before I wrap this up, it's always good to end on a call to action. So Joseph, if people are interested in investing into PRYPCO from wherever they might be based around the world, obviously following this webinar, we will send out everybody PRYPCO's details so they can get in touch with you guys. Equally, we'll send out Shojin's details, so feel free to give us a call to discuss further. But call to action for people who are interested. Joseph, why don't you go first?
Yeah, I mean, call to action is, as I mentioned, putting your money in a bank account currently or a savings account is not getting you the yield that you should be expecting. Investing in the real estate market is at the same time getting you passive income with the yield that is higher than what the banks are offering. At the same time, getting you capital appreciation in a city or in a country that is constantly growing and constantly delivering. On top of that, it's very important for you to diversify your investment. So that's why the entire business model of PRYPCO is to provide multiple units all around Dubai to kind of invest in every single one of them. And we do have an offer for everyone that's here attending. So if you sign up on PRYPCO Blocks and invest a minimum of 2,000 dirhams, which is roughly 5,000 pounds, we're giving a 1% cash back to all your investment in your PRYPCO wallet. So all you need to do is just to sign up using just to download it on the App Store or the Google Store, and then as soon as you invest a minimum of 2,000 dirhams, we'll credit your wallet with that 1% cash back.
Brilliant. Jatin, call to action?
Yeah, I think on our side, it's very simply go to the website shojin.co.uk. You'll have to register to really get access to all the proper information. Under FCA regulations, we can't show you any deal information until you've not just registered, but done something called an appropriateness test, which tests your understanding of risk. Once you've done that, though, it opens the gates, and you get to see everything. You get to see all the various projects, and on there's also lots of news about the projects and lots of webinars that we hold. So I would say the first thing for anyone to do is get registered, so then and sign up fully, so you get access to everything. Start learning more about our products. Arrange a call with our team if you'd like to have a quick chat through. And then my thing is always, doesn't matter. I know the returns sound very exciting, but never jump straight in with everything. Always test drive with small amounts. I mean, this is the beauty of this kind of model. Put in a grand or two, test drive the process. Once you're comfortable, then you can start increasing, but also always diversify. So, while we assess every project and, we monitor it for risks and everything, it's still, you want to be diversified across projects. So just in case something did happen to one, you're not affected. All your money isn't affected. So yeah, just go to the website and register.
Super. Great feedback. Well, Joseph, Jatin, thank you very much for your time, and thank you everybody for joining us here today. Hopefully you found it educational, and hopefully you are interested. We will be sending a follow-up to everyone in terms of a few more details about both companies and also how to get in touch with either Joseph or Jatin. So thank you everybody for your time. Jatin, Joseph, thank you again very much.
Brilliant. Thank you very much, guys.
Thank you,
Thanks.
Jatin.
Thanks,
Thanks,
Joseph.
guys.
See ya.
Thank you.
Bye-bye.